Hi, Warriors, and man, do you have to be a warrior with the action that we saw yesterday. So let's just review. I talked about taking partials, protecting your long dollar positions at 98. And so, you probably were taken out of it and was a good trade. And here we are. So you think this ceasefire is going to hold? And is this still part of a correction? I see two scenarios for the dollar that we could put in this high or low and then have something like this, maybe even a fib extension to where the targets were originally, or we're on our way to 96 to finish it off. Okay, so I am long some Dixie here. I'm also short some Aussie on the rally. And I want to point out that the Canadian dollar, which was our biggest trade last week with three signals, look how well it's held up. Not even close to last week's lows. And talked about protecting yourself under 36.50. I still think that's the right way to go and might even be a buy if it pulls back here. I still think there's more left in Canada to the upside. Next wave, if we get through 38, could take us up towards this 39 to 140 level. So I still remain constructive unless we close under 136.50. And the dollar index, I'm long against stops under 97. I'm not going to stay with it if we take out 97 because I'm not going to ride another 100 points lower. But if this does turn out to be just a news event that ends up not being a ceasefire, and we have some problems here over the next couple of weeks, we could still get a continuation move in the dollar. Also, I want to talk about, well, we have to look at WTI. So, there was divergence up here. I capitalized on this move for, up here, actually got out. This trend line held. We moved above it. So, a lot of people say, well, buy this break. I don't know about buying this break here. It's right back to the breakout. It could be. I would let it settle out. Maybe I'd buy oil shares. Um, but this is a pretty difficult break to buy. If you do it, do it with options. I mean, I was doing it with options down here, but we are right back. Look at today's low near the breakout. So I already have some counter trend trades going. So you don't basically, if crude does bottom here, that would build the case for another wave in the dollar to the upside. And I'm also taking a shot at the S&Ps. So we have a triangle here. All right. And here's your triangle. And I'm not a Elliottian expert, but triangles are usually a four, and then you end up with a terminal thrust. So I'm giving it a shot here with stops about 20 pips over the high of the move of 61 today. I mean, it's only a layup away from new all-time highs. You have Paul speaking on what used to be Humphrey Hawkins Day. So take a shot. It almost reminds me of that breakout that we had back in January. I'm going to have to go back to show you guys that. I'm not sure if I'm going to have to go to a weekly. But this was the breakout. See, we had a breakout here, and then we went above it for a little bit, and this level was 59.20. Okay, so breakout without follow through. We'll see what happens up here. Um, you know, I'm out if we're making new contract highs. But the reason I'm doing it is if you look at it on a 4-hour basis, although we're making new highs for this wave and this rally, there is still some pretty good divergence. If we start closing back under 60, under 6,000, that's going to give you a move back under 59.20. This 59.20 level held. I thought it was going to break it. But yesterday when I was online, it said, looks like it could break out this triangle. That's what happened. So I'm giving it a try up here. We'll see what happens with yields. But, I look at the yields and we're hearing all these dovish comments. Paul may disappoint. And here's another triangle, right? So we're getting a lot of these triangles here, just like I showed you in the S&P. So if this repeats the S&P pattern, we're going to break out over 443 and challenge the 460 level. I don't think the market will like it. I do think the dollar will. What else do we need to cover? Let's look at Bitcoin, which I've had a couple of good trades. Uh, Sunday night, I said we were approaching the targets. The targets were 96. We were at 98 before this huge rally up here. And, I look at this and it's much weaker than the S&Ps. This too could be a failing rally. You could even try it here with stops, maybe over tight stops, over call it, make it 107. You risk a couple grand looking for one more shot down. Look at the confirmed low that we had down here. So it's a possibility that 98 is not the low, and we still have a shot back down towards this 92 level. Let's look at the speed line. I think that's where it's coming in now. It's actually underneath now. So if we break, your next stop's 96 at the 200 day. So still possible this was not a bottom. Right now it could be an ABC and we're going to blow, but we still could have one more failure here based upon the confirmed low that we had on the 4 hour. Let's look at Ethereum. Had a nice recovery yesterday with Bitcoin, but weaker. So it's changed. Ethereum was showing more relative strength. Now it isn't. So you could call Bitcoin, NASDAQ, and S&Ps, and you could call Ethereum the Russell. Let's take a look at Ripple, not the wine that a lot of people used to drink, but had a pretty good recovery, but has not broken out. I'll see if we could still go to 140. But the big takeaway was, did yesterday's news, although the dollar rally, set up a buying opportunity in the Dixie, see if we could get a reversal day. Because next time through 99, I think we have a shot back at towards this 101 level. So I should know in the next couple days if that works. Otherwise, we're going to 96, and I'll take a look at it down there. And Canada, I still think, like I said before, as long as we're holding 36.50, you're okay. So some cashed in positions yesterday and putting out the same trade, looking for one more wave, bear market rally in the dollar from here for a C up towards these levels is still my call unless we take out these lows. So I'll see everyone in the room. Gold is taking it really on the chin. To me, looks like gold's breaking down. Um, we did not make new highs. I thought we would. We didn't. I think this opens the door for a lot of confluence down here, just a shade under 3,000. Silver's holding up a little better, but it's got, if you look at it, it's on the verge of breaking down of a little mini Head and Shoulders top here. Here's your neckline. Call it 5.5. Call it 7.5. So it could give you 34, 33 in the coming days, especially if the dollar does rebound and continues its bear market rally. Good hunting, everyone. Remember, don't just count your pips, count your blessings. Stay nimble. If this is reduced leverage, and find markets that the beta is not too much, and the currencies are, not as wild as what's happening in other different instruments that you talked about one tweet taking $10 out of crude. I have never seen that in my career. So everyone, remember, only thing we could control is risk. So don't use mental stops. Last time I used a mental stop, my first stop was a mental institution. So have your hard stops in there so you don't have to go through the mental battle of, well, I'll watch it a while. Um, I'll give it a day or two. No, if the contingency that you got into the trade is taken out, it should take you out with it. So everyone, see you tomorrow. We have an interview tomorrow. A gentleman who specializes in miners and the gold shares. So have a good day trading today. Let's see what happens.